Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to What's Hot. I'm Shireen Bhan and here are the top 5 stories that we're tracking for you today. The Finance Minister hints at pumping capital into PSU Banks. This comes just a day after promising necessary measures to boost the economy. Admits that the ability of PSU Banks to support investment is lacking and adds that a new policy is likely soon. That's a CNBC-TV18 exclusive. GST returns for August dropped marginally compared to July, but the CEO of the GST network expects more people who missed the deadline to file with a penalty. Admits that a software bug did slow down the filing process. The Finance Ministry denies rumours of Chief Economic Advisor Arvind Subramanian resigning. Sources indicate that his term is likely to be extended. A bittersweet day for Cyrus Mistry. Tata Sons AGM votes to become a private limited company against the Mistry family's wishes, but the appellate body of the Company Law Tribunal allows a waiver to the Mistry family to file a case against Tata Sons for alleged oppression of minority investors. And finally, the markets end flat after the US Federal Reserve begins its great unwinding. The landmark stimulus program, which began after the financial market collapse in 2008, will be phased out slowly starting October. The rupee ends at its lowest level in the last 3 months. But let's go straight to the top story tonight. One way to stimulate the economy is to try and strengthen bank balance sheets. But is pumping capital into public sector banks really the best option? That is the issue we're taking up on our editors' roundtable today. Just yesterday, the Finance Minister promised necessary measures to take the economy back to a high growth trajectory. But it's no secret that the centre has limited fiscal room, even though it might be looking at the possibility of creating a little more fiscal space for itself. It's also no secret that state-run banks are in desperate need of capital. So this begs the question, is it better to inject money into banks, thereby giving them the elbow room to increase lending and then spark a revival in investment? Well, when CNBC-TV18's Latha Venkatesh spoke with the Finance Minister earlier today, he said all options for a better economic environment are on the table. However, he did hint at a bank recap plan, saying that weak PSU bank balance sheets are not the best thing to have when the economy needs support.
I've had a series of meetings with different departments of the government, ministers, secretaries, and other economists within the government itself. This process of consultation is on. And obviously, this government has been proactive from day one. And some recent data itself raises certain concerns. And these are concerns really to do with a push-up to the investment. And a lot of it also has to do with the capacity of the banks, particularly the PSBs. And therefore, we are in a process of discussion, and very shortly, whatever is required to be done in order to improve that environment in terms of policy, we'll certainly react to it.
You specifically say banks, so should we expect that you are thinking on lines of further...
anything?
No. You said banks, that's why. Is it recapitalizing them a little more?
You see, it's an obvious analysis that anybody dealing with the situation would make. Now, what steps we take, you please wait for our decision in this matter.
Some timeline?
As I said, we are a proactive government, and therefore, we'll certainly be reacting.
Some rural spending, sir. I mean, considering
please wait for some time.
Well, that's the Finance Minister there saying wait for some time before we reveal what we have planned. But as we're given to understand, it's likely to be a multi-pronged approach. One, PSB bank recapitalization, that is certainly on the cards. Higher spending push, railways, roads and highways, that's likely to get some attention as well. And also exporters, the MSME sector, access to credit and perhaps other SOPs, those are being considered. So it's going to be a multi-pronged approach that the government does decide to take and will announce once the Prime Minister signs off on it. But let's bring Latha back into the conversation. Latha, is capitalizing PSU banks the safer route to try and stimulate the economy?
It looks like a consensus has emerged on recapitalizing PSU banks, and not with just 20,000 crores. The FM all but said it when we ambushed him earlier today. Later, Finance Ministry sources also said that hectic plans are underway, though it isn't as if it can happen in a few weeks. It will take time to plan. The original buy-in for this came from the Reserve Bank. The intellectual argument came from the Reserve Bank Deputy Governor Viral Acharya, who pointed out that Japanese banks in the 90s, US banks in the late 80s, and even European banks after the sovereign credit crisis, post-Lehman, became zombie banks. They didn't lend because they didn't have enough capital. So the lesson is that if India has to grow, banks have to be adequately capitalized. Now, what is this recap bond? What creature is this? What the government does is that they don't have 90,000 crores to give the PSU banks. So what they do is they just give them a recap bond. That is not a GSEC. It's not a Government of India bond. It's a recap bond. So it doesn't become part of the fiscal deficit. Banks buy that bond, and that money which the government makes, it puts back into the public sector banks as capital. Now the point is, will rating agencies, IMF and all the big guardians of banking health accept this? Will they say, no, this is fiscal deficit? Of course they will. There will be a lot of grumbling from rating agencies, but the finance minister can actually argue his way that he has also tried a fundamental restructuring of banks. The IBC, the bankruptcy code, is one very good example. The other thing which he will probably wave to them is that he's also looking at privatizing. It's quite possible that that argument, that you're fundamentally restructuring, and that is why we're using this below-the-line recapitalization. Of course, the old argument of using RBI's reserves to capitalize could also be employed at this juncture.
All right, Lata, but as consensus emerges on the recapitalization of PSU banks, it is important to look at the quantum of capital that these banks will need. Prashant Nair has some key numbers. Prashant, what kind of a gap needs to be filled to offer these banks the support that they require? They may not get it or even come anywhere close to the number, but what is the ask at this point?
It looks daunting, Shireen, to say the least. I mean, the one big number that I think we need to focus on is about 1.24 lakh crores. To estimate the total capital shortfall, which may arise a year from now, that is in financial year 19, and the estimates that you're seeing on your screen is from a brokerage house, Antique Broking, worked out these numbers. There are lots of moving parts. You have to assume what kind of asset growth will one see, what kind of growth in risk-weighted assets will one see, what kind of improvement, if any, in return on assets will we see. Will we see further impairment along the way? And of course, then there is the stop of Basel III requirement, where by F519, capital adequacy needs to be 9.5%. You put all those things together and you get this big number. If you can have the graphics up back again, you get this big number of about 1.24 odd lakh crores. I've just put the big sort of banks and the big numbers on your screen. I've not put the entire PSU bank shortfall. But this basically is the bulk of what the problem is. Take the first three banks on your screen, IDBI Bank, State Bank of India and Punjab National Bank. Those three, and SBI, by the way, I've not taken standalone, but the consolidated sort of subsidiaries included, you essentially are looking at SBI, PNB and IDBI accounting for about 60% of the capital shortfall, which is about 1.24 odd lakh crores. There are a couple of banks which do not require capital, according to Antique's calculations and assumptions. But I think, 1.24 lakh crores, as you were saying, the government may have to spend more for PSU bank recap on what they had budgeted in the, what they had penciled in the budget, the union budget. But I think it still is a much larger number going at the current rate. Unless, of course, there is a dramatic improvement in the underlying economy, lending picks up, and then the assumptions become a lot better. But as of now, according to Antique, the big number is 1.24 lakh crores is the capital shortfall, which needs to be made good by F519. Back to you.
All right, Prashant, appreciate you joining us. The number that was budgeted for bank recap, nowhere close to that. But as you heard there from the finance minister, this is likely to be something that will be pushed forward, which is higher recap for PSBs. But let's talk about the GST now, which has had an impact on the economy. Yesterday was the last date to file returns for the month of August, and that number has seen a drop. Speaking exclusively to CNBC-TV18, the CEO of the GST network said that 31 lakh people have filed their return for the month of August, but he is hopeful that more people will file their returns, even though the deadline has expired, so they'll have to do that with a penalty. For the month of July, total returns that have been filed now stand at 49 lakhs. But let's take a look at this number from Maharashtra. The state's GST commissioner has told CNBC-TV18 that only 3.3 lakh returns have been filed for August, and this is less than half of the 6.8 lakh returns that were filed for July. And Maharashtra is the largest contributor to taxes. Now, speaking with me just a short while ago, the CEO of the GST network admitted that there were technical issues that hampered the return filing process. But the government now is concerned about the pace of filings. Take a look.
So people have filed after the last date in big number.
Sure.
What we had on the last date was 32 lakhs for July month. And thereafter it has kept on increasing, and now we have reached a figure of 49. Okay?
Okay.
Yeah.
So you've reached 49 lakhs for the month of July.
Yeah, which is
Can we now talk about the month of August, sir?
Yeah, for month of August till yesterday we had 29.5, and it has become already 31 as I speak. And yesterday we had 13.76 lakh returns which were filed in one day.
A final question, Mr. Kumar, before I let you go, because there is a separate committee that's also looking into the issues related to the GST and functionality. There was a meeting that happened in Bengaluru last weekend. Can you explain to us where things currently stand in terms of being able to address some of the concerns that have been raised?
Yeah, so there were two kinds of concerns or other issues which people had. Some of them were relating to what happened on 5th and 8th of September when people were filing GSTR1, and there was a software bug which led to slowing down of filing. But on the other hand, we had tested our system with 50,000 invoices getting into the system per hour, and on 9th itself we had more than 8 lakh returns which were filed once that issue was taken care of. And then some other issues were like invoice getting error out. Now that happens because the system checks the GST of the buyer. System also checks whether the invoices are not duplicate. System also checks credit note, debit note had reference to correct invoice which is already in the system.
Right.
So these are some of the things which system does, and if it is not correct, it errors out.
So the August filings at 31 lakhs, and people who had filed their returns on the date of the deadline expiry, which was yesterday, over 13 lakhs. Now, our third big story tonight. The Finance Ministry has dismissed reports that Chief Economic Advisor Arvind Subramanian has resigned. On the contrary, CNBC-TV18 learns that the CA may in fact be given an extension and that a final call will be taken shortly. Sapna Das joins us now with the exclusive details. Sapna, the Finance Minister clarifying that the CA has not resigned. What are you picking up from your sources?
A categorical denial coming from the Finance Ministry in terms of the fact that the CA has actually put in his papers no such reports. Such reports are incorrect is what the Ministry has clarified officially. Apart from this, the Ministry has also said very clearly the Chief Economic Advisor actually continues. Now, we do know for sure that his term is coming to an end sometime next month. But the question here is that would he be up for another extension? Well, the overall environment here is very positive in the sense that the government would like the CA to continue as a Chief Economic Advisor to the Finance Ministry. It just remains to be seen how quickly a call is taken on this front. Probably there'll be more clarity in the next couple of days. But expectation is high on the fact that, yes, another extension is on the cards. Also remains to be seen what the CA, Dr. Arvind Subramanian himself has to say on this front.
It's been a bittersweet day for Cyrus Mistry. First, the good news for his team. An appellate tribunal today allowed his investment firms to pursue charges of oppression and mismanagement against Tata Sons and others at the NCLT on the basis of merit. Remember, Cyrus Mistry had moved the appellate tribunal after his plea was rejected by the NCLT due to the lack of requisite shareholding. Now, the not-so-good news for the Mistry camp. Tata Sons' resolution to go private has been passed by its shareholders at the company's AGM today. Ashmit Kumar and Yash Jain here with the details on both stories. Yash, coming to you first. So it's a done deal now. Tata Sons at the AGM getting the all clear to go private.
Well, yes, it's the first hurdle which has been taken out with the Tata Sons board giving its approval for turning the company into a private limited company from the current public limited company in today's annual general meeting. And if you really look at the shareholding pattern of Tata Sons, with Tata Trust and the various Tata Group companies holding over 75% of the shareholding, it was quite clear that the decision had to be in favor of the Tatas. But also what I've given to understand from my sources is that the Shapoorji Pallonji Group, which holds about 18.4% stake in Tata Sons through its two companies, which are Cyrus Investments and Sterling Investments, did raise certain objections as far as the proposal of turning Tata Sons into a private limited company is concerned. But yes, it was 75% of the shareholding vote which was required and which has been received by the Tata Sons board. Now, going forward, of course, the board will have to approach the National Company Law Tribunal or NCLT for their approval for this particular proposal of turning Tata Sons into a private limited company is concerned, where we are given to understand that there could be certain objections which would come from the Shapoorji Pallonji Group again. But of course, it remains to be seen how and if the NCLT finds any material in the arguments which come from the Shapoorji Pallonji Group.
All right, Yash, appreciate you joining us. Let's go across now to Ashmit. Ashmit, explain the appellate tribunal's order for us. And also, what should we expect now? The matter moves to the NCLT in Mumbai?
Well, before we come to the road ahead, just a couple of things to keep in mind. One, Section 244 of the Companies Act. That section is the one that requires for a shareholder to move the appellate tribunal or to move the tribunal raising questions of oppression and mismanagement. That shareholder necessarily needs to have a 10% shareholding. Having said that, the same clause also provides the tribunal with the powers to grant a waiver. Now, this is the same waiver which had been disallowed by the NCLT, which is the lower tribunal, the National Company Law Tribunal. This had been disallowed in the month of March. Subsequently, we saw the appeal being made by Mistry before the NCLAT, and they again had two applications. One, of course, the original one with respect to oppression and mismanagement, the other one on relief seeking with respect to a waiver. Now, what's important here, that as far as Cyrus Mistry's original application is concerned, that has been disallowed, that has been dismissed by the NCLAT, citing non-maintainability. But here's the interesting part. The second part, as far as waiver is concerned, this is where partial relief has come Cyrus Mistry's way. The NCLAT has held that given the prima facie concerns that have been raised of oppression, mismanagement, they do warrant a consideration that this is an exceptional scenario, and on the back of that, a waiver has been granted in exercise of its power under the Companies Act. So as of now, for the road forward, the decks are cleared as of today. For Cyrus Mistry, his application before the NCLT now stands revived. The same questions of oppression and mismanagement can now be raised. But all of this, importantly, will be subject to one important caveat. That's the road that Tatas choose from this point on. Should they choose to play ball, we'll see the action shift back as far as NCLT Mumbai is concerned. But should they appeal, in that case, should they appeal, this order will then lie before the apex court, and that's where we'll see arguments afresh on maintainability. So all eyes now, as far as this case is concerned, on Tata Sons and the action that they choose from this point on. Back to you.
The National Company Law Tribunal had misapplied the law and seemed to have misunderstood the case in its entirety, which was the ground of our attack before the tribunal, appellate tribunal. And we're very glad that our stand has been vindicated, because the appellate tribunal has said that while that 10% rule will apply to an overall shareholding and not just to the equity shareholding, and therefore the petition is not maintainable as a matter of right because of the section, because of the 10% shareholding. Nonetheless, a prima facie case has been made out, and this would be a case for waiver to be granted, especially in the facts of this case, which is exactly what we had argued before the NCLT.
The road forward, we don't know. We have not been able to read the judgment. Once we read the judgment, we'll decide. As per the Honourable Tribunal's order, the NCLT Mumbai has been asked to dispose of the petition within 3 months. So that is what the order says as of now.
Well, that is the latest in the Tata Mistry battle. But here's a quick check of the market action. The US Federal Reserve has announced the landmark process of unwinding its balance sheet. The stimulus program, which began after the financial crisis in 2008, will be gradually withdrawn starting October. Here's a quick check of the action on Wall Street. Absolutely flat. The Nasdaq down by about 0.5%. The Dow and the S&P 500 not doing very much. Also, the possibility that a rate hike could be coming in December, perhaps souring sentiment. Back home, a volatile trading session on Dalal Street. The Nifty and the Sensex ended the day on a weak footing. The Nifty settled above the 10,100 mark, while the Sensex closed the session by dropping about 30 points. Pharma stocks were amongst the top gainers today, including Dr. Reddy's, Cipla and Lupin. Look at Dr. Reddy's, they're 7.5% higher on that stock. But on Mint Street, the rupee has weakened to a 3-month low against the dollar today, closing at 64.80 versus the dollar. This on the back of worries of a widening fiscal deficit after the finance minister said that the government may soon announce measures to revive economic growth. Well, that's it then on What's Hot. Here are the top 5 stories of the day. We'll keep you posted on more on India Business Hour in the next 30. Up next is Markets Today, where we get you trade ready